All right, hello, and welcome back to the Broken Business Models podcast. We're your hosts, Ryan and James. And before we get into today's podcast, just a quick disclaimer how we start each of these. Nothing in this podcast or any of our other materials should be taken as investment advice. James or I could have positions in any of the stocks we may mention, and we reserve the right to change those positions at any time. So make sure to always do your own work and consult with a professional before making any investment decision. With that being said, the topic of today's podcast is going to be Plug Power, which is a company that we've talked about in the past, but recently reported their 2024 full year earnings. And so now is a good time to take a look back and see what their current situation is. So Plug Power is a company that is engaged in the hydrogen industry. So what their business strategy generally is they sell hydrogen fuel cell devices to their customers, which are the devices that take in hydrogen and output electricity. Plug Power also sells the hydrogen fuel itself to these hydrogen fuel cell operators. And they also have a small business selling electricity, which is generated from hydrogen power. Now, we've talked about this in previous videos, but in general, hydrogen energy is not a commercially viable source of energy or even energy storage solution, especially compared to other energy sources, energy generation and storage solutions that are out there. It's just way too expensive compared to the alternatives. And so basically in all of the businesses that I just mentioned that Plug Power plays in, selling the fuel cell devices, selling the hydrogen, and selling the electricity, they make massive, massive gross losses on all of those. Just to give you a sense of just how bad the business is, here I have the quarterly revenue and net income for the past several quarters. And as you can see, their revenue is trending downwards, and their quarterly net losses are just atrociously bad, especially if you compare it to the size of the revenue. They lose, on average, on the same order of magnitude of how much their revenue is. So just atrocious gross profits and net losses. Now, Plug Power in the past year or so, they've been able to tell that they're kind of rapidly reaching the end of the line. To give a sense, at the end of 2024, they only had about $200 million of liquid cash on their balance sheet, which is only about 1 quarter's worth, or even less than 1 quarter's worth, given their rate of cash burn. And so in 2024, they went on a number of initiatives to try to reduce their cash burn. One of their biggest ones was a shift towards producing their own green hydrogen versus purchasing gray hydrogen on the open market, which they said would reduce their costs and allow them to eventually be able to sell hydrogen profitably. Now, we've talked about this on previous videos about the scientific kind of technological challenges of producing hydrogen in a commercially viable way, and we were very, very skeptical that this would actually work. And now that we've seen their 2024 financial results, that kind of confirmed our beliefs and our skepticism of that, with their gross margins still being highly, highly negative. And just recently in their 2024 financial results, they also announced further cost-cutting measures in a project they're calling Quantum Leap, where they're announcing even more massive layoffs and facility consolidations because their situation has just become so dire. So that's the story of Plug Power over the past year. I'll kick it over to you, James, to talk about their most recent financials and what their situation is going forward.
Yes, thank you. So Plug Power is probably one of the stocks that we've talked about the most on this channel, really over the past couple of years. I think we've made like 3 or 4 different videos in the past on Plug Power. All of them are linked. We provided links to all of those previous videos in the description below if you want to check those out as well. But I was just looking at the chart of the stock price, Plug Power's, as their financial situation has gotten worse and worse over the years. Their stock price has, collapsed from a high of almost $70 in 2021 at the peak, down today it's less than $2. So it's comfortably within penny stock status. It's things that obviously have not been going very well for the company. So before I move on to talk about Plug Power's most recent reported financials, just a quick reminder for anybody who doesn't already know that we also have a website called differentiatedanalytics.com where we provide premium short selling research as well as other tools for investors. And so what we do is we identify what we believe to be our most compelling short selling opportunities, companies that we believe to be either fraudulent or overvalued. And then we write detailed short reports in a PDF format, which you can access if you become a paid member to Differentiated Analytics. Another benefit of membership is you get to join our private Discord server where we talk about stocks, and you can also recommend video ideas for both this channel and our main Wall Street Millennial channel. So if that at all sounds interesting to you, make sure to go to differentiatedanalytics.com. The link is in the description below. Now back to Plug Power. So as Ryan explained earlier, one of Plug Power's initiatives that they did last year was they started making their own hydrogen production facilities. So in the past, they would go onto the open market and buy hydrogen. Most of the hydrogen they would buy was so-called gray hydrogen, which is made from fossil fuels and actually emits carbon dioxide during the making of the gray hydrogen. So gray hydrogen is not really clean because it indeed creates carbon emissions. So Plug Power said, okay, well, we're going to instead make our own green hydrogen facilities, our green hydrogen production facilities, where we will produce our own green hydrogen using renewable energy. And they claim that this would be way cheaper than the gray hydrogen that they used to purchase. Now, at the time, we said that this is likely BS because for a variety of technical reasons, the green hydrogen is generally significantly more expensive than the gray hydrogen. And indeed, if you look at this chart here, this is the gross loss that Plug Power incurs on its fuel delivery segment. So one of Plug Power's segments is them selling hydrogen fuel to their customers. In the past, they would buy gray hydrogen on the open market and then sell it to their customers at a lower price, basically subsidizing their customers, and they would have a massive gross loss because of that. Well, starting in the first quarter of 2024, they started transitioning to their own internally produced green hydrogen. And they claimed that this would be, way cheaper, and that should help their that should help them with their fuel margins. Well, as it turns out, throughout 2024, they continue to incur massive gross losses on their fuel deliveries, despite the fact that they have been transitioning to their own green hydrogen. So in the most recent quarter, they lost almost $40 million of gross losses just on their fuel deliveries segment. And that's with now including a lot of their own green hydrogen. So exactly as we expected, this green hydrogen, this transition to green hydrogen has not helped them to improve their fuel margins because at the end of the day, hydrogen is just not an economically viable technology. So the only way any customer is going to be willing to buy any hydrogen from fuel cell is if they sell it below cost, because the only way that you make the math work for a customer is to sell it below cost. And that necessitates massive gross losses on the part of Plug Power, which is what we continue to see. And then Ryan also, I think, alluded to the fact that in 2024, they started to do massive cost cuts, and they've been bragging about the fact that their free cash flow, their cash burn has been improving. And if we look at this chart on the left, this is Plug Power's reported free cash flow. And over the past, 2 quarters, the cash burn has indeed improved. So in the fourth quarter of 2024, they burned approximately, I think it was like about 180 some million dollars of cash burn, which is actually the lowest level of cash burn they've had in the past few years. However, we have to take note that one of the reasons that they've been able to reduce the cash burn is because they have been reducing their level of inventory and reducing their working capital. So if you are drawing down your inventory faster than you're replacing it, that improves your cash flow position because revenue is coming in, cash is coming in as you sell your old inventory, but you are not even spending the money to replace that inventory. So that indeed is a benefit to cash flow. But obviously, that's not sustainable in the long run because eventually you just run out of inventory. So that doesn't last forever. Now, that's basically what Plug Power has been doing over the past couple of quarters. They've been reducing their inventory and they've been reducing their other, working capital. And as you reduce your working capital, that benefits your your reported free cash flow, but that's not sustainable in the long run, obviously, because eventually you will run out of working capital. And this chart on the right is the free cash flow excluding changes in working capital. So I believe this is a more fair, this gives a more fair look into how much cash the actual core business of Plug Power is burning, excluding the impacts of changes in working capital. And as you can see, there has really been very limited, if any, improvement in their cash burn situation. They continue to burn over $200 million per quarter, which is an extreme level of cash burn. Now, historically, Plug Power has relied on dilutive equity issuance to fund its losses. Back in 2021, 2022, when there was the big bubble in speculative stocks, um, Plug Power's share price was at, $60, $70. When their share price was so high, it was very easy for them to raise huge amounts of money, billions upon billions of dollars, by issuing shares. So see, back in, the July second quarter of 2022, they had over $3 billion of cash on hand. But as they burn cash, their cash balance has been declining, and as their share price has declined, it's become more and more difficult for them to basically replenish their cash. And really, since the end of 2023, Plug Power has been living hand to mouth. It's sort of like the corporate equivalent of living paycheck to paycheck. Each quarter, they burn a massive amount of cash and they try to sell as much stock as they can, but that just barely covers up that quarters of cash burn. So their cash has remained at a very low level for the past year. And again, you can think of it as the corporate equivalent of living paycheck to paycheck. And ultimately, this is not sustainable. And the reason why this is not sustainable is because you end up with a situation sort of like a hyperinflationary spiral. So if you know anything about economics and the history of hyperinflation, look at like the Weimar Republic or Zimbabwe or Venezuela, these countries that have hyperinflation. What happens is that at first, the government has to issue more currency to raise revenue, but then the increased supply of currency makes the value of the currency lower. So then the next year, when they have to raise money again, they have to issue a larger number of units to make that same, to raise enough revenue. And it creates sort of a vicious spiral where, the more currency you issue, the less the currency is worth. And then because the currency is worthless, you have to issue even more currency the next year, and so on and so on. Well, the exact same thing happens with stocks. So a company like Plug Power, back when the stock was $60, $70, they only have to issue a relatively small number of shares to cover that year's cash burn. But as they issue more shares, the supply, just based on supply and demand, this causes dilution, and the share price will decrease a bit. And then the next year, the share price is lower. So Plug Power has to issue a larger number of shares to raise the same amount of cash, which causes even greater dilution. And then this just snowballs on itself, where each year Plug Power has to issue more and more and more shares just to stay afloat, and it becomes a hyperinflationary spiral. And this on the right, you can see back in 2017, they had about 200 million shares. Now that's increased to almost a billion. And this is, obviously a very desperate situation. And as Ryan explained previously, they just announced what they call Operation Quantum Leap, where they say that I have no idea why they call it Quantum Leap. It has nothing to do with quantum. I think they just tried to find a cool sounding name. But in their Operation Quantum Leap is that they want to do further layoffs and cost cuts where they plan to reduce their annual costs by 150 to 200 million dollars per year. Now, in the full year of 2024, Plug Power burned over $1 billion of negative free cash flow, if you exclude the changes in working capital. So if you just look at the core business, Plug Power is burning cash at a rate of $1 billion a year. Even if they can reach the high end of their cost cut guidance and cut $200 million worth of costs, they're still going to be burning $800 million. And not only that, if you cut costs and lay off employees, obviously their capacity to operate as a business will be hampered by the fact that they now have less employees. So the revenue will also decrease. So just because you cut $200 million of costs does not mean that your cash burn will reduce by 200 million because your revenue will also go down. But even if we assume that their rates of cash burn would decline by 200 million, which is extremely generous, they would still be burning 800 million dollars per year, which is huge. And if you consider the fact that they're burning $800 million, and now that the share price is less than $2, they would have to issue, what would that be, like 500 million shares just to like cover the next year's cash burn. And that would be like an increase of their share count by another 50%. So the share price now is so low and their cash burn is so extreme that as they, over the coming months and years are going to have to issue, they're going to have to issue an obscene number of new shares just to keep the lights on. And I think we're going to see this, the stock, collapse to zero very, very quickly, probably within the next year or so, just because of these, hyperinflationary share count dynamics, which you can see here just on these two charts. So I think, we've been talking about Plug Power for a long time. I think the first video about Plug Power we made was more than a year ago. This has been kind of one of the longest standing companies that we've looked at, and we've just kind of watched it decay into a dumpster fire over the past year. And I think we're truly reaching the end game for Plug Power, where at this point, the company has just been so discredited, the losses are so extreme, and now their share price is so low that I think we're getting close to the point where the only likely outcome for this company is bankruptcy. So that, I think, wraps it up for everything we had to talk about Plug Power today. As always, if you have any opinions or thoughts about Plug Power or hydrogen in general, please let us know in the comment section below, and we will see you all on next week's video.